Hello traders, Todd here. Welcome to the free video update. This is going to be for Wednesday, July 15th. And as the title of the video suggests, let's not get ahead of ourselves here. So we're going to start with the S&P on the, this is the daily. And so far, the move to the downside has been a nice three-wave correction. And if you've been following along in the free videos here, you guys know we've been really calling for the lows here and saying don't get, too out over your skis to the downside here. And we've seen a nice, actually it's a 4-day rally. You'd include that crazy little candle there. 4-day rally up into resistance. And again, let's not get ahead of ourselves on the top side. We have 786 retracement at 2115 of the three-wave decline that we saw on the downside. Okay. So that sets up at least a three-wave retracement back down. That would give us a downside target. Let me just look for the 50% price retracement. That is your B-wave target at 2079. A shallow target would be the 38% at 2087. So again, 2087, 2079 are your downside targets in the S&P. From there, I think we're okay to rally. And again, this is the same thing I've been telling you on almost every video. 2160 is the level where we really need to consider us on severe notice for a downturn. Okay, so along those same lines is the, kind of a stock market top is the emerging market. So you take a look at EEM on the daily here, and implied volatility has come down quite a bit. We're in the 28th percentile. You see the purple line there. Implied volatility is dropping. So things are coming down here a little bit. But look, just real simple broken trend line support that becomes resistance into the 38% price retracement of this decline. So we have some problems, or we have a potential resistance zone right around $39.50 to $40 in EEM. Same thing with FXI, your China ETF. This guy has implied volatility that is still high, 51%, but you see implied volatility dropping a little bit. Things are calming down. But again, let's take a look. I see a potential first wave push down. Wave 2, false break to a lower high. Wave 3 is a crushing wave. Wave 4 comes back. Same thing. If you look at the uptrend support in the FXI, which is your Chinese ETF, this is Chinese stocks based in Hong Kong. You look at the uptrend support that's been in play since March 2014. We're coming back to test this as resistance, and this could be a wave 4 setting up a wave 5 decline. So I don't want to say you're out of the woods yet, emerging markets or China. Okay, how far can this fourth wave go? Well, I've done the first step, which is study distance traveled in wave 2, projected up from the bottom of 3. There are your potential stopping points. We are going to stack the zone here. I'm going to go drawing retracement. I'm doing retracement of wave 3. And we are simply looking for agreement. 23% did not hold. We have a level right on top of each other. They're so on top of each other. This must be the 1.618 4v2 relationship, as well as the 38% 3 versus 4 relationship. So that's a key zone, $43.95. We have a minor one there at $42.90. So let me just kind of line this price and time resistance zone up. So I will include that 1272 up to this zone. So we have resistance in FXI. Let me just kind of bring it to current day in that time zone. And we could even do something a little bit more tricky. We could get the time extensions out. And if you want to figure out the ideal time to do option strikes, let me just do that, and I'll really confuse you, but don't worry. I'll pull it together for you. 38% out to the 100% is right there. So that right there is your ideal price and time turning zone for wave 4. All right, so let me just do this. Delete, remove, and we will remove. That is your wave 4 zone right there. So basically, you're looking to be short FXI into that point. Once you get a test up into that zone, you can start selling option premium above. You can even do it now, but don't structure anything to turn before August 20th. Okay, so you don't want to be short, in my opinion, anything that expires before August monthlies. Okay. So this is, wave 4 can chop around and do a lot inside of this price and time zone, but that's the ideal turning point for wave 4. Then if you want to get directional, then you push down, into the end of September or end of August into early September. All right. So that's kind of doing fib price and time for you. We're teaching classes on it. We're doing a lot. It's kind of a new concept. So stay tuned for more information. If this video helped, please give us a like, or if you'd like to hear from us continuously, go ahead and subscribe. I'll link you to it. Very much appreciated. Helps us rise up and get this content to other awesome traders like yourself. So appreciate it. As always, have a great week, and we'll talk to you soon.